Hi everyone, this is Robert Wave, Elliott Wave Options, and welcome to the S&P 500 US Market Update. As you know, I've been doing these recordings every few days, but thought I'd pop back in and see how today's big move affected the charts. So let's take a look. Okay, first of all, to be very specific, at the time of this recording, which is just after 10 o'clock Eastern time, the futures right now are down 4 points. So the S&P futures are down 4 at the time we're talking about this. So I wanted to come back in and show you this move to the upside today. Did clear that 100% level. And if we take a look at volume, which is what you want to see on a potential breakout day, you can see that we did have declining volume moving into this breakout, which is what you'd want. You go through the consolidation, which we showed you the triangle pattern that was forming in the market. So consolidating on lower volume, you get a breakout, you want the volume to be increasing, which it was. With that said, however, just want to remind you that this day today doesn't mean anything more than April 1st meant, where we had the down day. In other words, you have to have a second day, a confirmation day, or a follow-through day on a breakout, break of a major support level, fib level, whatever. So tomorrow's close is going to be key. That's why I wanted to come back in today and share that information with you. So if we do get a higher close tomorrow, then we move to the fib retracement chart to see where the next likely move is. And the first move would be there at 50%. Followed by a potential move up to the 61.8% fib retracement level, which is that 293 mark on the SPY, coinciding with that 38.2% extension to the downside. Remember, that was the extended level. So another comment that I wanted to make real quickly here is there's been a lot of comments on whether or not this is ABC or 1, 2, 3, 4, 5. One of the reasons that I really focus on the zigzag patterns, one, Elliott himself said the corrective patterns are even more reliable than the 5-wave patterns are. A lot of people teach the 5-wave patterns, not as many people teach the zigzags or the corrective patterns, but most people know that are familiar with Elliott Wave that wave 3 is the strongest wave, quite often the longest wave. But a lot of people that teach the 5-wave Elliott Wave program don't talk about trading the wave 3. And I don't understand that, because if we know it's the strongest wave, why wouldn't we want to trade that? And quite often you can identify patterns that are tradable within the wave 3. So that's why I talk about the zigzag patterns so often. Plus they're quicker, they're faster, and you can make shorter term trades that way. So just wanted to clear that up, that this is the wave 3. We're in the wave 4 bounce now, so very likely that we're going to have a wave 5 down at some point. Right now, with this break above here, if we get the confirmation, then we look to see where the next fib level is. Well, here's another monkey wrench that we need to deal with here, another wrench in the works, if you will. When we look at this move to the upside here, we're actually we have now a qualified zigzag pattern to the upside. In other words, this is the A wave here. There's the B coming down to the 38.2% level, and then we would look for the wave C extension. So we use a fib extension tool here, and you can see with that our target would be somewhere around the 61.8% level to the upside. Those are other fib levels that we can move to, but the first target with a 38.2% B wave correction is 61.8% on the extension. Now, if we were to make it all the way up to that 100% fib extension level, look where that is. A little over 290, which is awfully close to this 293 and this 293. So we're starting to see several potential patterns that could reach that 290 plus level. But again, it is the rules. If we don't get the confirmation tomorrow, then we're back to looking for a move back to the downside, or we set up and start over again. That's the rules. But we just wanted to show you where things were now. Thought it would bring up oil, that meeting that was canceled today. It's still set for Thursday. A lot of people think that's just jawboning and that the meeting's never really going to happen. But if it were to happen, that could continue this bounce. The $9 bounce is a little less than what we were looking for. But if we put the moving averages on here, you can see that we did get just a touch extended on Friday's move. And then coming back today, we're still above the 10-day moving average. So still looking for a potential breakout here if there is anticipation of a production cut and that meeting. So the upward move still could occur. if that meeting falls through and it turns out that it was all smoke and mirrors, that there wasn't ever really a meeting planned, then obviously that could end the rally attempt in oil. But just wanted to share that with you. Also, we hadn't looked at the dollar lately, but we talked about this before with this A wave extension here, or impulse move to the upside, and then the B correction, and then the potential C wave extension in the dollar. And so far that 61.8% fib level has held rock solid, as it does quite often. We're moving to the upside. Bit of a doji there today, so we'll see if we get maybe a little bit of a pullback in the dollar, but it's had a nice march off of that fib level. So it looks like a pretty good zigzag pattern setting up there on the dollar if you trade currencies. So that's the update I wanted to give you. Hope everybody's doing well. Back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.